Welcome back to the channel where we break down real-life money matters to help you stay ahead. If you are new to this channel, please like, share, and subscribe. Imagine this. You receive a shiny envelope in the mail. Inside is a brand new credit card offer promising free flights, cash back on your purchases, and exclusive perks you can't resist. But what if I told you that behind this tempting offer lies a trap, a cycle of debt that could take years to escape? Today, we will talk about how credit card rewards can trap you in debt. Let's break it down step by step so you can understand how to protect yourself from falling into these traps and make smarter financial decisions. Number 1, the seductive power of rewards. Credit card rewards are designed to captivate. Who doesn't love the idea of getting something back for spending money? For example, let's say you spend $100 on groceries and your card gives you $5 back in cash back. It feels like free money, right? But here's the truth. Rewards programs aren't gifts, they're bait. Credit card companies know the more you swipe, the more interest and fees they can charge. That's how they make billions of dollars each year. Not from giving out rewards, but from collecting fees and interest from cardholders. Let's look at an example. Sarah, a college student, gets a credit card offering travel points. She starts using it for everything. Coffee, clothes, and even big purchases she didn't plan for. But at the end of the month, Sarah can only afford to pay the minimum balance. The interest starts piling up, and soon, she's paying hundreds more than she expected. Another trick is redemption restrictions. Many rewards programs require a minimum number of points before you can redeem them, or they come with hidden fees. Suddenly, those free rewards don't feel so free. Here is the takeaway. Rewards programs make you feel like a winner, but the reality is often the opposite. Knowing how they work can help you avoid the traps. Number 2, the fine print, which nobody reads. Now let's talk about the fine print. That small text at the bottom of every credit card agreement that most of us ignore. Hidden in that fine print are details that can cost you hundreds, if not thousands of dollars if you're not careful. Let's break it down so you can understand why reading the fine print is so important. The fine print also includes annual fees. Did you know that some premium rewards cards charge annual fees as high as $500? This is money you're paying just to keep the card in your wallet before you even start using it. Sure, the card may offer perks like access to airport lounges, higher cashback rates, or travel insurance, but if you don't use those perks regularly, you might be paying for benefits you're not even taking advantage of. For example, if you earn $300 in rewards but pay a $500 annual fee, you've lost $200. Second important thing in fine print is APR, annual percentage rate. The APR is essentially the cost of borrowing money on your credit card. Many rewards cards have interest rates between 18% and 25%, which can add up quickly if you don't pay off your balance in full every month. In this scenario, the cash back or points you earn are barely a fraction of the interest you're paying. It's a losing game. Here is an example. Let's look at Alex, who signed up for a premium rewards card that offered no annual fee for the first year. He used the card frequently and earned significant points. However, Alex didn't read the fine print that stated the annual fee would jump to $250 in the second year. When the fee was automatically charged to his account, Alex was caught off guard and couldn't dispute it. This is a classic example of how overlooking the fine print can lead to unexpected expenses. Number 3, how rewards influence your spending habits. Did you know that studies show people spend more when using credit cards instead of cash? Why does this happen? It's because swiping a card doesn't feel like spending real money. Think about it. When you hand over cash, you physically see the money leaving your wallet. That moment creates a connection to the value of what you're spending. Now let's talk about psychological rewards. Credit card companies have mastered the art of making you feel good about spending. Every time you earn points or cash back, it triggers a little burst of happiness, like a mini victory. But in reality, these small rewards can lead to much larger financial consequences if you're not careful. Here's an example. John goes shopping for a new pair of shoes. He set a budget of $100, but then he spots a pair that costs $150. John thinks to himself, "It's okay to splurge a little because I'll earn points on this purchase." He swipes his card and walks out feeling good about the decision. But what happens next? Over time, these small justifications start to add up. John ends up spending more than he planned month after month, and his credit card balance grows. Another thing to watch out for is increasing spendings. This happens when you make small, unnecessary purchases because you're focused on earning rewards. For example, you might decide to grab an extra coffee or buy a new gadget because you think, why not? I'll get points for this. At first, it doesn't seem like much, but those little purchases can snowball into a significant amount of debt over time. So, what's the solution? It's all about mindfulness. Try using cash for everyday purchases. When you physically hand over cash, you're more likely to think twice about what you're buying. If you do use a credit card, set a strict budget and stick to it. Avoid impulse buys by asking yourself, do I really need this? Or, will this purchase help me meet my financial goals? Another tip is to keep track of your spending in real time. Use a budgeting app or write down every purchase you make. Seeing the numbers add up can help you stay accountable and avoid overspending. In the end, rewards are only beneficial if you're disciplined. Don't let the promise of points or cashback lure you into spending more than you can afford. By being mindful and intentional with your purchases, you can enjoy the perks of credit cards without falling into debt. Number 4, the real cost of rewards. Let's break this down in detail so it's crystal clear how rewards can sometimes end up costing more than they're worth. Imagine you spend $1,000 on a rewards card. Now the card gives you cashback or points. Let's say you earn $100 in rewards. That sounds fantastic, doesn't it? But here's the catch. You don't pay off the balance in full at the end of the month. Instead, you make the minimum payment of $50. At an interest rate of 20%, that balance starts accumulating interest. Over the next year, you'll pay hundreds of dollars just in interest alone. Let's do the math. Your initial balance is $1,000. Each month, you're charged 20% APR, which is about 1.67% per month on the remaining balance. By the time you finish paying off the balance, making only minimum payments, you'll have paid $300 or more in interest. So, even though you earned $100 in cash back, you ended up paying 3 times as much in interest. That cash back no longer feels like a benefit, right? The compounding effect. Another hidden danger is compounding interest. Credit card companies calculate interest daily or monthly, which means you're paying interest not just on the original balance, but also on the interest that has already accumulated. This can make your debt grow faster than you expect. Here is an example. Let's look at Maria. She loves using her rewards card for travel expenses. She's earned a few free flights over the years, but Maria often carries a balance on her card, paying just the minimum each month. When she calculated the total interest she'd paid over the past 3 years, she was shocked to find it added up to $2,000, far more than the value of her flights. The real cost of rewards often lies in the interest and fees you're charged for carrying a balance or redeeming points. Don't let the allure of perks and cashback blind you to the bigger picture. Remember, credit card companies design these programs to benefit themselves first. Stay informed, stay disciplined, and ensure you're not paying more than you're gaining. Number 5, hidden fees that eat up rewards. Many credit cards have hidden fees that reduce the value of your rewards significantly. These fees include annual fees, late payment fees, balance transfer fees, foreign transaction fees, and redemption fees. Let's dive deeper. Annual fees. The premium credit cards often come with high annual fees ranging from $95 to $500. While these cards promise more rewards or exclusive perks, the fee can easily wipe out the value of the benefits if you don't maximize their use. For instance, if you earn $300 in rewards but pay a $250 annual fee, you're only left with $50 in actual value, or less if you miss other terms. Late payment penalties. Missing a payment can add $30 to $40 to your balance instantly. Even worse, some cards may cancel your rewards if you miss payments, reducing the value of points you've already earned. Foreign transaction fees. Planning a trip abroad? Many cards charge 3% of every purchase you make outside the country. If you spend $1,000 while traveling, that's an extra $30 in fees, which could negate the value of any travel points you've earned. Balance transfer fees. Moving debt from one card to another often incurs a fee between 3% to 5% of the transferred amount. For example, transferring $5,000 could cost you $150 to $250 up front, wiping out any savings you might have hoped for. Redemption fees. Some rewards programs charge fees when you redeem points or limit how and where you can use them. For example, travel rewards might only apply to certain airlines or blackout dates, forcing you to spend more to make use of your points. How to avoid these fees? Before signing up for a rewards card, take the time to compare the fees to the potential benefits. Ask yourself following questions. Do I spend enough to justify the annual fee? Can I pay my balance in full each month to avoid late fees and interest? Will I be traveling enough to maximize the travel perks without losing money to foreign transaction fees? Sometimes a no annual fee card with fewer rewards can save you more money in the long run. Always do the math to ensure the rewards outweigh the costs. How to use credit cards responsibly. Using credit cards doesn't have to lead to debt. Here are some simple tips to stay in control. Set a budget. Decide how much you can spend each month and stick to it. Track your spending. Use apps or a notebook to monitor every purchase. Pay the full amount. Always pay your full balance to avoid interest charges. Avoid impulse buyings. Ask yourself if you really need what you're about to buy. Limit the number of cards. Stick to 1 or 2 cards to simplify your finances. By following these steps, you can enjoy the benefits of credit cards without falling into their traps. Credit cards can be powerful tools if you use them wisely. Don't let rewards trick you into overspending or falling into debt. Stay informed, stay disciplined, and always prioritize your financial well-being. If you found value in this video, don't forget to like, subscribe, and hit the notification bell so you don't miss more tips to master your money. Also, let us know in the comments if you are trapped in credit card debt. What strategies have you tried to manage it? Remember, you're not alone, and together we can work towards smarter financial habits. Thank you for watching, and see you in the next video.